The 2023 Florida housing market foreclosure crisis is beginning to unfold. It's unfolding. And today we're going to do a deep dive into the market where we're starting to see a massive increase in foreclosure sales, up 111%. If you're new to the channel, welcome aboard. My name is Chris Igo. If you're a returning viewer, I appreciate your participation in our journey. Now, as of today, mortgage interest rates are going through the roof. We're pushing 7%. And the Fed is indicating that they're going to continue to take whatever measures are necessary to stamp out inflation. So I suspect when they meet, there is a very strong likelihood that they increase Fed funds rate by a minimum of a half basis point, but yet to be determined. I don't know. They could do more, they could do less, but they 1000% are committed to stamping out inflation, which continues to run rampant. And in the interim, we're watching housing prices in Florida continue to appreciate. But for how much longer, yet to be determined. Now, before I get into the housing market data, and this is unfiltered data, this is the most current data that exists, so that you know what the actual numbers are, so that you've got the best information to know exactly what's going on for yourself, for your family, and for your financial bottom line. As a boots on the ground operator of a high performance real estate team, right now in today's market, I have got clients ready to pull the trigger on another home. They are desperately searching for their dream home and dream lifestyle right here in my hyperlocal market. But the type of home they're looking for in the neighborhood that they're looking for it in, it doesn't exist. It's not on the market. So, in spite of a massive increase in the amount of homes that are listed for sale currently happening in my market, there is still a shortage of inventory in a lot of places. And so there are a lot of frustrated buyers out there and a lot of frustrated sellers out there that can't get what they want because the product that they want isn't on the market yet. And I suspect that's got a lot to do with the fact that most people are not interested in trading out of a 4% or lower mortgage interest rate. They're not real excited to go out there and buy a new home at 7, 8, 9, 10% because it's a lot more expensive. It's going to put a massive hit in their monthly budget. And most people aren't willing to do that. But what a lot of folks don't necessarily know is that in today's market, you can negotiate a much better price and a much better interest rate if you have the right seller, if you find the right home. And as of right now in my market, there are a ton of sellers, homeowners, who are getting their expectations burst. And they're finally starting to realize, because the market has told them, the market has kicked them in the teeth, the market has not yielded them what they want. And so they're getting reality based. And buyers are getting much better deals and much better terms if they're working with the right agent. And not to toot my own horn, but it is factually true. We got a buyer under contract at a 40% discount from the original list price, walking into $200,000 worth of equity. And no, unfortunately, I can't guarantee you that I'm going to do that for you. This was a unique circumstance, but I can assure you, anybody walking into $200,000 worth of equity is doing cartwheels. And that's obviously great news for my buyers. But full disclosure, I've also got a listing and a seller who is not having that experience. And I'll be more specific as to what I mean by that. Yes, we got them under contract. And yes, we got them the number that they wanted. So all of that looks good on paper. But unfortunately, with interest rates going as high as they have, we found ourselves in a situation where the buyer, who we don't represent, didn't get funding. And they were right at the cusp of blowing their loan contingency timeline. The deal was in jeopardy. My sellers were very concerned because the truth is the market has changed since they went under contract. So I represent the seller, and those sellers are now stressed because the buyer's financing was about to fall through. And this is why it is critical that you work with the right real estate professional. And as I mentioned, this is not my client. This is not my buyer. This is not my lender. These are folks that I don't know from a hole in the ground. However, I do know the right people to come in and save the deal. And that's exactly what happened. Now, I suspect most folks would probably bury their head in the sand and get ready for a cancellation and put the home back on the market, but that's not what we did. We connected them with the right people, the right lender who went into action and was able to save the deal, was able to get them financing. And what I was shocked to find was actually able to get them a lower interest rate than they were originally quoted, despite the fact we're in an increasing interest rate market. But they got the job done and the home is about to close. And I call that a win win. But enough sales pitch for me. Let's get into the numbers because the numbers don't lie. I remain committed to telling you the truth as to what's happening in each market within Florida. And so, right now, we're going to do a deep dive into the data that exists within the Tampa St. Pete market. And to be totally clear, this is not a market that I service personally. I am on the opposite side of the state. I'm in Southeast Florida, and this is on the west coast of Florida. We're talking about Tampa, St. Petersburg, and Clearwater Metro. We're talking about the counties of Pinellas, Hillsborough, Pasco, and Hernando. So, if this is a market you are interested in and you would like to be connected with an all star professional that we know, like, and trust that we've done business with in the past, then please reach out because we will connect you with an all star right away. But let's get into the data so that you know the truth, what's actually happening in this metro. And to be clear, this is January numbers and we're in March. So these are lagging numbers. These are a month behind. This is January. And please be aware, this is the 5,000-foot overview. The local markets that exist within this metro are going to trade with different intensity. There will be different supply and different demand, and certainly very different price points. But this is the 5,000-foot overview, which is instructive. But please understand that when you're shopping for a home, you must get more granular, you must know more detail so that you can advocate the right way to get what you want. Nonetheless, January 2023 numbers are out. This is single family homes data, right? Closed sales down 30%. We are seeing this trend everywhere. With interest rates as high as they are, closed sales are down significantly across the board. Cash sales are down almost 50%. January 2022, it was 1,144. That dropped to 578. Median sales price in the Tampa, St. Pete, Clearwater area up 3.8%. Single digit growth. That's what I expect we're going to see in most Florida housing markets. But yet to be determined, I don't know. And to be clear, median sales price is not the best number to look at if you're shopping for a home. You want the average sales price. And the average sales price upticked almost 7%, 6.8 to be exact, to 472,000. And 472,000 for most families making the median income is unaffordable. How will this play out over time? Yet to be determined. I don't know. Well, I certainly suspect I think I know. But for now, this is what it is. It's up almost 7%. Dollar volume dropped, but that makes sense because closed sales dropped. Median percent of original list price received is down from 100% to 94.9%, down 5%. That could be a function of overpriced listings, or it could be that buyers have leverage and are negotiating better deals. But for now, the days of getting 100% of list price received are very likely over unless you're working with a professional that knows how to create a market within a market and get multiple offers that bid the price higher. But most agents don't know how to do that. And I suspect that you're going to see this trend continue to decline. Median time to contract, whoo-wee, up almost 290% to 35 days. While 35 days is a return to normal, that is not a big number, although on paper, that's a big jump. 290% is a big deal. Median time to sale, that's up 62%, 83 days. Again, that is not unusual. Pending sales, new pending sales, down 14.4%. That is a big drop. New listings, down 10%. That is a very big drop. So there are far less new listings coming to the market to the tune of 10%, which is not great if you're thinking about buying. And again, I suspect that has a lot to do with the fact that those homeowners do not want to trade into a higher rate mortgage because no one wants to blow up their budget and pay more monthly than they're currently paying. And that dynamic is eventually going to hit the housing market. But when I say eventually, I really mean it already happened. It's down 10% in this market. That trend will continue as interest rates appreciate. Pending inventory is down 19%. Inventory of active listings is up 172%. So, although there are less new listings, there's a heck of a lot more active inventory, which are your choices if you're thinking about buying. So, you've got a lot more leverage in this market. And if you're thinking about selling, you got to be aware there are a lot more homes that are your competition. So, it is critical to price your home the right way to get what you want. Month supply of inventory, huge uptick, 250% at 2.1 months. To be clear, 2.1 months is still a seller's market, but it's a massive jump up from zero point 0.6 months, which brings us to the stat that everyone wants to know, which brings us to the stat that a lot of people feel will be the catalyst that brings the market down, which reduces prices drastically. And that, of course, is distressed sales. Now, before I talk about the numbers, which you can clearly already see, and the massive uptick that we've seen in foreclosures, as far as percentage gains are concerned, up 111%, I need to be very clear. Distressed sales take time. So, as the pain of recession becomes worse, as the consumer starts to make bad decisions based on fear, which there is not a lot of fear in the market right now. There may be concern, but the stock market has not gotten eviscerated yet. The everything bubble has not burst yet. Yes, the markets have come down, but in terms of people feeling as if there is blood in the streets, which Warren Buffett says is the best time to buy, well, that fear does not exist yet. There's a lot of concern, but people are not panicked yet. And when they are, that's when they stop paying their mortgage. So, to role play this with you, if someone was to decide to stop paying on their home today, it would likely take 18 to 24 months or more, depending on how savvy they are and depending on how much they lawyer up and depending on what games they play. But it's going to take a minimum of 18 to 24 months for the bank to get possession of the home. And then from there, well, that might create a massive uptick in distressed sales, right? Well, I don't know because the truth is, in the future, I don't know that these banks are going to come back to the market to sell the home or if they're going to go to institutions and sell them wholesale, if they're going to package them and create some type of new product which cuts us out completely and never lets this hit the market. That's what I suspect will likely happen. But again, yet to be determined. I don't know, but it wouldn't surprise me, which brings me to where we're actually at today, which is an increase in foreclosures within the Tampa St. Petersburg Clearwater metro of 19, up from 9, which again, on paper, looks to be an impressive uptick of 111%. But full disclosure, there were 2,424 sales traditionally in January 2023. 19 is a blip on the radar. It's not going to create any type of ripple effect in the housing market today, or at least as of January. But I can assure you in the future, as the pain of recession gets worse, those numbers will increase and those numbers will have an impact on home prices or not, yet to be determined. I don't know. And short sales tell a completely different story. They're down almost 67%. There were only 3 short sales in Tampa, St. Petersburg, Clearwater Metro, which was down from 9. Now, I hope you found this content valuable, and if you did, please subscribe to the channel and keep your eyes peeled because I will continue to share the housing market data that exists within Florida so you know the truth about what's actually happening. And if I can ever be of assistance to you, please reach out directly and check out my next video because I suspect you will love it a lot. And until next time, peace.